Have you ever wondered why paying taxes in Nigeria feels so complicated? Each year, the country loses billions of naira due to tax evasion and non-compliance, which hampers economic growth and deprives essential public services of much-needed funding. Tax compliance, which is the cornerstone of any thriving economy, is defined as the fulfillment of tax obligations by individuals, businesses, and other entities. It involves accurately reporting income, filing returns, and paying taxes within prescribed timelines as stipulated by tax laws and regulations. In Nigeria, tax compliance is crucial in generating revenue to fund public services, infrastructure, and national development initiatives. Yet, a host of challenges undermine these efforts. In this video, we will highlight the key challenges facing tax compliance in Nigeria and propose practical solutions to overcome these barriers.
Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos.
Challenges of tax compliance in Nigeria. 1. Lack of awareness and education. A significant impediment is that many taxpayers, particularly individuals and small businesses, are unaware of applicable tax laws, compliance procedures, or the benefits of fulfilling their tax responsibilities. This lack of awareness stems from several factors such as knowledge gap. Poor dissemination of tax-related information has left many taxpayers uninformed about their legal obligations. Cultural barriers. In some cases, a culture of tax avoidance persists due to lack of understanding about how taxes contribute to national development. As such, there is a need for targeted education campaigns to empower taxpayers with the knowledge to comply willingly. 2. Complexity and ambiguity of tax laws. Nigeria's tax laws are perceived as overly complex with numerous regulations that are often ambiguous and difficult to interpret. This complexities arises from several factors such as overlapping jurisdictions. Multiple tax authorities at the federal, state, and local levels create confusion and lead to double taxation. Intricate filing requirements. Small and medium enterprises and individual taxpayers often struggle with intricate tax forms, multiple levies, and a lack of accessible resources. As such, simplifying tax laws and processes is essential to reduce compliance burdens and prevent both intentional and unintentional non-compliance. 3. Weak enforcement mechanism. The enforcement of tax laws in Nigeria is weakened by several systemic issues, such as corruption and mismanagement. Widespread perception of corruption discourages compliance as taxpayers doubt whether their taxes will be properly utilized. Lack of capacity. Inadequate resources, outdated systems, and insufficient training for tax officials hinder effective enforcement. Inefficiency. Bureaucratic bottlenecks slow down tax assessments and audits, reducing the credibility of enforcement efforts. As such, strengthening enforcement mechanisms can rebuild trust and deter tax evasion. 4. The informal economy. Nigeria's large informal sector accounts for approximately 65% of GDP and over 80% of employment, yet it remains largely untaxed. This issue is compounded by factors such as cash-based transactions. The absence of formal record keeping in the informal sector makes income tracking and tax enforcement challenging. Limited integration. Many informal businesses operate outside the regulatory framework, avoiding tax registration and compliance together. Addressing this challenge requires strategic efforts to formalize informal businesses while providing incentives for compliance. Now, let's consider practical solutions for improving tax compliance in Nigeria. 1. Enhance taxpayer education. Educating taxpayers is fundamental to improving compliance, and the key initiatives include public awareness campaigns. Leverage digital media, radio, television, and print to create widespread awareness of tax obligations, benefits, and penalties for non-compliance. Community-based education. Partner with local organizations, religious institutions, and professional bodies to deliver tax education tailored to different demographics. Curriculum integration. Introducing tax education into school curricula to build a culture of compliance from an early age. 2. Simplification and transparency of tax laws. Simplified tax processes and increased transparency can alleviate taxpayers' confusion and reduce non-compliance. This includes consolidation of taxes, merge overlapping taxes, and eliminate unnecessary levies to streamline the tax system. User-friendly platforms. Develop intuitive online tax platforms for registration, filing, and payments, which will be accessible in local languages to reach a broader audience. Open data policies. Publish detailed and transparent reports on tax revenue utilization to build taxpayers' confidence. 3. Strengthening tax administration. Modernizing tax administration through the following initiatives will be key to effective compliance. Technology integration. Utilize advanced tools such as blockchain, artificial intelligence, and big data analytics for fraud detection, tax audits, and compliance monitoring. Capacity building. Invest in the training and professional development of tax officials to enhance their efficiency and integrity. Interagency collaboration. Foster coordination among federal, state, and local tax authorities to harmonize efforts and reduce duplication. 4. Incentives for voluntary compliance. Taxpayers can be encouraged to comply willingly by introducing incentives like tax credits and rebates, offer credits, reduce rates, or expedited services to compliant taxpayers. Recognition programs. Publicly acknowledge and reward compliant businesses and individuals to encourage others. Enforce penalties fairly. While offering incentives, enforce strict penalties for evasion to deter non-compliance. Formalizing the informal sector. Integrating the informal sector into the tax net requires strategic intervention such as simplified tax regimes, introduce presumptive tax systems with minimal documentation requirement for micro and small enterprises, incentivize formalization, offer benefits such as access to financing, business support services, and government contracts to encourage registration. Outreach programs. Conduct outreach activities targeting informal sector operators to educate them about the advantages of formalization and tax compliance. In conclusion, addressing the systemic challenges to compliance such as lack of awareness, complex laws, weak enforcement, and the dominance of the informal economy requires a coordinated multi-stakeholder approach. By implementing the proposed solutions, Nigeria can foster a more compliant tax culture, enhance revenue generation, and pave the way for sustainable economic growth. A collective effort by tax authorities, policymakers, businesses, and individuals is essential to realize this vision and establish a culture of compliance that benefits all stakeholders in Nigeria. Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.